Hey everyone and welcome. I am on vacation this week, but still bringing you a new video, and this is actually video number 50. I just want to thank you guys so much for sticking with me on this journey, as I have enjoyed every step of the way as we continue to grow and build a community of like-minded individuals looking to build their wealth long term. The month of July was overall a very solid month for our dividend portfolio. In fact, we received $422 on the month in dividend income. During the month of July, our portfolio climbed 6.1%, but it did underperform the S&P 500, which just saw the best month since November 2020, in which it climbed 8% over the month of July. But much of that S&P 500 outperformance was largely due to big cap tech, mega cap tech. You saw the likes of Apple, Google, and Amazon report great earnings, or I should say decent earnings that weren't as bad as anticipated, and those stocks jumped higher in recent weeks. In fact, Amazon climbed as much as 13% over the past week, and Google, or otherwise known as Alphabet, was up over 10% at one point. Now, for transparency purposes, I own a good deal of both of those stocks, Google or Alphabet and Amazon, but both of them are non-dividend paying stocks, so you will not see them in this portfolio. In today's video, we will do a portfolio update, show you how much and who we receive dividends from, who we're going to receive dividends from in the coming months, and also take a look at the positions as well as the top performance during the month and the laggards in the dividend portfolio. So make sure you stay tuned throughout the entire portfolio. Hey everyone, Mark here, and welcome to the channel where we talk everything dividends. And in today's video, we do a dividend portfolio update, something I do each and every month just to be transparent with my followers. We take a look at all of the positions that I own in the dividend portfolio, and as well as the top performers during the most previous month, as well as the laggards the most previous month, and look at performance over the total year as we look to outperform the S&P 500. If you are new to investing or looking for a great new platform, then definitely check out Webull. I will leave a link down in the description below, and if you click on that link, sign up for a new account and deposit any amount of money. You could put a penny in there. Just open that new account, put in a penny, and they will give you free stocks just to get started. So definitely take advantage of that promotion today. And before I look at my portfolio, down in the comments section below, let me know how you did. How did your portfolio do in the month of July? All right, so now let's take a look at my dividend portfolio update for the month of July. As you can see here, looking at the portfolio tracker, our portfolio market value has reached over $198,000. We're projected to receive annual income from this point forward over the next 12 months, nearly $5,500 in dividend income, which equates to a yield of 2.8%. On the year, our year-to-date loss is only 2.1%. And if we move over to look at the S&P 500, on the year, the S&P 500 is down nearly 14% still. So we are vastly outperforming the S&P 500 even after that strong performance that they saw in the month of July. So looking back at the portfolio, let's take a look at let's look at the top 10 positions that we have. You're not going to see any change up top with our S&P 500 index fund, which still equates for roughly 10.2% of the entire portfolio. We have our dividend appreciation index fund, which equates for 7.8%, followed by Johnson & Johnson, Bristol Myers Squibb, Vici Properties, which has done quite well since we added that very close to the 52-week lows. That is our largest position in terms of REITs. We also have the Schwab Dividend ETF, which is one of my favorite dividend ETFs to own, followed by AbbVie, which had a rough week, and that's going to be at the top of our watch list going into August right now. They reported mixed results in that last week, actually on Friday of last week, and the stock fell, so definitely take a closer look at AbbVie because I know I will. Our 8th largest position is Lockheed Martin, which has a portfolio weighting of 4.4%, followed by Apple, and then another S&P 500 index fund, or ETF, I should say, which is from Fidelity. So again, I have this tracker that's for full transparency, but it's bringing in my account positions from the likes of Vanguard, Fidelity, M1 Finance, as well as Webull. So in terms of moves that I made this month, there isn't really any to report. I made a few small reinvestments of some dividends that I received that were automatically reinvested, but for the most part, we didn't really add any true positions or add any new positions, initiate any new positions in the portfolio. So let's next take a look at the dividend income. Again, at the beginning of the video, I mentioned that we received $422 in the month of July. Awesome month. It is down from our June month, which we received $612, which has been our highest month to date. So we're going to see if we can beat that here in the coming months. So you could see here in December, we're projected right now to receive $631, but we're looking to make some more moves, especially if I buy AbbVie here in the coming week, then that's definitely going to boost our income in that month of December. So let's see if we can make that well over 650 and maybe reach 700 by the end of the year for just the month of December. That's going to be our goal, and see if that we can get the overall dividend projected income up to, let's say, $5,750. That's going to be a goal for this year, is to get the projected 12-month dividend income up to $5,750. So as you could see here in July, we received money obviously from Realty Income. They're giving us money each and every month, being a monthly dividend paying REIT. We also got money from WP Carey, which is another REIT, Store Capital, which happens to be another net lease REIT. So those first three have been REITs so far. Iron Mountain, another REIT. We received $34 from them. CubeSmart and Medical Properties Trust. So that's quite interesting. I actually didn't look at this before until I noticed it right now. All of the positions that paid us dividends here in the month of July were REITs. We didn't receive one dividend payment by way of a non-REIT here in the month of July. So that is quite fascinating there, that we received, what is that? 6 different payments from dividends, and they were all REITs, equating to $422. So if we look down here, you can still see our graph that we are climbing each and every month, outperforming. The red is going to be last year, 2021, and the blue is what is projected this year, or what is actuals for this year for months that are prior to July. That's kind of the goal. With dividend investing, it is passive income, but it's also compounding. You're always looking to compound and make more than you did the previous year, because if you get paid dividends, you want to reinvest those, and at the same time, these dividend-paying companies are increasing their dividends at the same time. Finally, our last tab here, we will take a look at the dividend portfolio performance. So you could see how we've done per year, and it's going to be full transparency. You're going to see the times that we're in the red, which a lot of portfolios are in the red right now, but overall our portfolio is vastly outperforming that of the S&P 500, and that is the goal. We are about to turn the corner here and see our portfolio turn positive for the year. We are just 2% away, and I think we can do that, but definitely be cautious, because we saw this bear market rally per se. That's what a lot of economists are worrying about right now. They want to warn you and say the bottom might not be in. We could see more volatility, so definitely take advantage of those pullbacks and have stocks, high quality stocks, that are at the top of your watch list. So as you can see here, looking at this chart, you can see that we started at 186,000. We didn't add any new money this year or this month, and we finished the month at $198,000 for the dividend portfolio. So we're almost back, up over $200,000 in this portfolio. We gained $11,000, over $11,000 on the month, up nearly 6.1% for the month of July. So that is the performance right now. Now let's look at the individual positions performance and take a look at we're going to look at our Seeking Alpha portfolio here. We're going to look at 1 month out. So let's take a look at the top 5 performers in the dividend portfolio for this month. So Apple was going to be our largest one. That one had a 1 month performance of 18.4% in the month of July. The S&P 500 there was up 16.2, or sorry, the consumer discretionary was up 16.2. We already saw what the S&P 500 was up, but the consumer discretionary ETF that we have, FDIS, was up 16.2. Vici Properties, which is our largest REIT that you saw a second ago, was up nearly 14.5%, followed by Deere, the industrial giant, was up 14.2%, and rounding out the top 5 was Qualcomm, which was up 12.7%, even though they reported mixed earnings that saw their stock fall over 6% on the month. Next, let's take a look at the laggards over the past 30 days. We can see Verizon, who also reported mixed earnings, and their stock fell with their earnings results, as well as AT&T mixed earnings results. So Verizon fell nearly 10% at 9.3%. AbbVie, which I already mentioned, they fell 7%, 6.9% on the month of July. Bristol Myers Squibb, stock ticker BMY, which is another large holding for us here on this dividend portfolio, fell 3.9%. Lockheed Martin fell 1.2%, and Johnson & Johnson fell a little below 1%. You want to throw in Raytheon Technologies, which fell 0.1%, and those are really the only red stocks that we had in the month of July. So that was a huge month for us in terms of performance. A lot of our stocks came through, but we're still in the thick of earnings season. We still could see volatility. Inflation is still high. Interest rates are still rising, so make sure you prepare your portfolio and have a watch list of stocks that you want to jump on, because we're not looking for short-term results. We're looking for long-term wealth building. So that's all I got for you in terms of the dividend portfolio, but I did want to make a quick shout out, as this is YouTube video number 50. I never thought I'd be able to do this, but it is just awesome to be able to speak with you guys each and every week. So make sure you guys continue to comment down below on my videos, and I'm hoping to bring more material to you guys to let you know and be transparent, not only what I'm investing in, but what I'm looking at, and also to help you folks perform your investing so that you can reach your financial goals in the long term. Again, I hope you enjoyed the video, and if you did, do me a huge favor, click that like button, as that is huge for the growth of this channel and the algorithm moving forward, and we will see you next week. Take care.